Hello, it is the 14th of May 2011. Welcome to this weekend silver analysis. Gold with a down day on Friday, down 11 and 3/5, or about 3/4%. Silver up 2 and 2/9%, or 77 cents to 35.39. Gold to silver ratio going down, meaning silver priced in gold going up towards the upside. Now, as far as the charts are concerned, when we take a look at this on the hourly time frame, the 50-day moving average has been placed within this chart, and this line here represents the not the I was gonna say like a weighted average price, but it's like a VWAP without the volume. It's basically just a running average since the crash began, or at least that of the intermediate term crash. So therefore, this thing's going to be declining, just yet another indicator that is going to be important to signify that the selling has come to an end. The Fibonacci level in here, this 39, it was supposed to be support. It was now resistance. When you're at a massive level, it doesn't always have to be support, and quite often it can become that of the reverse. What's a little encouraging, and it's not that encouraging, is this lower low is barely a lower low. And like I say, it's not encouraging because it really does need to get above this significant level between 38 and 39. The downtrend for the market would be, that's too big of a line. It would be this one in here. It connects the top, this pierce, and it connects this high. So until that breaks, the market is still in a major downtrend. Even when it breaks it, it really doesn't change too much within the bearish sentiment. Although this line here, if we get above it, we'll take it from bearish to neutral. Getting above this level would change the direction to that of bullish. This line here, this is a 20-day moving average, another level that may be resistance. Now, if you look at this same chart with less candles, take a look at this with the 5-day moving average as well as the 1-day. The 50-day is also on the screen. I'm going to keep the 50 on the short until it's no longer needed. Right now, I think it is very, very necessary. And since the market has come down towards these levels, what's happened, it's came up towards this first Fibonacci level, very, very common, representing this high and this low. Found resistance and consolidated by correcting through time, sideways action, very bullish to be able to do this. Got above it, tried to find support. It's now battling within this area. So therefore, the failed move is either going to be this breakout, trying to get past this Fibonacci level, or this little small move in here, which should create a fast move. If it's this move that's a failure, then the fast move should take us at least a break above this resistance. If the failed move is this one in here, it should top pretty much up to anywhere up to here and start to go lower, and a move towards the previous low set earlier on the morning session at $32 and about 30 cents per ounce. Okay, let's now move this on now to the daily chart. And within this chart, only a few candles. I'm still focusing big within the SLV volume, having tremendous amount of shares, over 100 million on every single day, with the exception of this day, which pretty much was 100 million. Over 200 million in here, pretty much 300, and then over 200 there. A lot of heavy volume. What's encouraging is seeing how we've had this heavier volume without the markets caving in. And that's a little interesting to say the least. Now, at the same point, this could lead to a much higher volume day, and I mean much higher on this, probably 4 to 5. That would be a washout down candle that would most likely bring it well below, at least to the 30 level, if not 28, 29. That would be pretty massive, but the whole sell-off has been massive. And again, at the same point, It's not a surprise to see this heavy volume come in. Once again, maybe have some high volume up to here that can bring the market towards here. Just find a way to lower the volatility and then start to make more rallies on lower volume. That's another possibility. We'll just, I guess, have to continue on and see how this plays out. But I guess the key thing is to really get above this level, establish a pattern of higher highs and higher lows. There's only been one significant lower high since this breakdown. This is the second lower low. If it bottoms, if it starts to cave in and go lower like this, then this bottom won't count, and the lower one will count as the new breakdown low. Okay, the next one that we're going to take a look at will be the, let's do the most longest term, the quarterly. And what more do I need to say? It's in a spectacular uptrend right now. When you take a look at these trend lines forming the way that they are, to me, this is really bullish. People are coming here stating, "Oh man, this is too bad. We're in a bubble." And yet, it's only been one candle down, and it still may not be. We're only halfway through this quarter. And it's been extremely volatile, to say the least. I've been talking a lot how the volatility is coming to be huge, sort of like it was in here, which is really the case of parabolic or major capitulation kind of moves. It can be in that type of nature. Okay, so the next one will be the, let's do the monthly chart. Now, once again, same sort of thing. It's the same chart, obviously. But we haven't tested that support line in quite some time. If we draw a parallel line connected with this resistance, well, what do we see here? We see a breakout within this trend channel to the upside, which is more often than not, you're going to break these trend channels to the opposite direction. But no, this one changed it to the upside. It's came down to this level. It's found support, which is an extremely bullish sign. Now, what I'm going to do now is I'm going to really zoom in on the screen. It will look very Commodore 64-ish like. If you had one of those, you'll see what I mean. And if you have this on full screen, it'll look pretty big. Anyway, here we go. Okay, so what we got here is the most recent price in here. Let me just even make it a little smaller. There we go. What I'm going to do now is draw the trend lines. We'll go through each different channel. Start with support. That's not a straight line. And that's not the size that I wanted. So this is the trend. It went below it. It pierced below it. It hasn't held above it. Or below it. Hasn't held below it yet. But this is pretty much the channel. What channel were we in before? Well, and we're going to do a bunch of these, so it's going to be about 4 minutes doing this. I've already done it once. Okay, so this is its previous channel. What was the channel before? Well, it was a down one, and it was pretty vicious. And we'll just draw another parallel line with it. And more often than not, these parallel lines do work. The next trend, well, in here, it was sideways consolidation. So we'll just put a little square box there. Another uptrend in here. You can say this again to be another sideways consolidation. Although within this sideways consolidation, you got a downtrend, uptrend, and downtrend. 2 downtrends and an uptrend within that period. But we're just going to talk about this as sideways action. Next trend line. This is it right here. You can see how it broke away from it and then is able to, it corrected with a harsh sell-off. So we're seeing the same thing we did before. After having a nice break of resistance, it comes back, and then this one corrected through time for quite some time before it ended up having its breakout. And then there we go again. There's the resistance line. They usually seem to work out fairly well. And within this one in here, this is where we have a whole whack of time corrections. So I'm going to make this entire thing a time correction again. An upward trend. And then I'm just going to just finish it at that, and we'll see the direction. There we go. So we've built all the little boxes in. We can see the trend. We've only had two directions within this current bull market since the 2008 bottom, which is this one and the one that is greater. Do we do a third that is greater? It's possible. Is it unlikely or likely? I think there's a good chance, but hey, that all depends on how the banking system pretty much falls. Falls. Yeah, falls. I mean, not, yeah, falls. Okay, then the next one is the weekly chart. Then we're going to finish it off with the volatility. And it's the same sort of deal. If you're looking at these charts on a linear basis, they may look like they're breaking down more. That's what I like about the logarithmic. The linear, when you have parabolic moves, it can make it look just a little bit off. But it's keeping this original trend from the August breakout alive. The next trend is this resistance point, which has now been support. This resistance that connects these peaks, support in here. Once again, finding resistance at support, it's a very wonderful thing, to say the least. Okay, next up is the volatility. I've changed it up just a little bit. The way this works is before I did the average of the 30 and the last 100, added them together. This is a little bit different. Instead, the blue line represents the average over the last 2 days and the orange line over the last 10 days. And I like how these things working together because you can see how different areas, like there's resistance in here. It tried to find support here. It did. It had a big lift off, found support again. Didn't find support, didn't find resistance. Things are going crazy. So the wild moves are happening. Why the market slowed down for a significant period, I don't know. But for a brief period, it was only a 1% average over 2 days, yet before it broke above this, at least from March the 7th until late April, there was not one single period where the 2-day average was above 1%. These big volatile moves mean both for the upside and the downside, and they're not normal. They only happen generally if there's something within the news that's so big. What's in the news now is the currency is falling badly too, because it's fiat. It's made out of like nothing. That's why it's falling, and people are finding this stuff out too. Daily chart, we got the same sort of deal. The only difference on this one is it doesn't do the last 2 days, nor does it do the last 10. Rather, it does the last 20 and 100 days. So the blue line represents the last 20 days, the average volatile moves, the orange the last 20. It was at least at the 9% mark back in 2008. There's no dates on here. If you need them, they're pretty easy to refer back to. This is basically September, late September, early October 2008. And of course, this is current. But as far as the trend's concerned, within the orange line, resistance, resistance, resistance. Tried to get above it here. No. Tried to get above it here. No. Tried to get above it here. Yes. Nice stabilization at this period. It's now breaking off huge towards the upside. Once again, we've now seen the massive volatility break out, but this is the first time since 2008 we have seen on the daily time frame the volatility be this wild. Now let's switch this out to the monthly. This now represents a 2 and a 10-year moving average. 2 and 10 years. This is the monthly chart. Now, when it made it big, what year do you think this was? Yeah, it was 1980. It was 1980. Didn't find support here. We're not going so volatile. They couldn't have afforded to make the markets very volatile in the 80s and the 90s because that would have meant people waking up to the silver market. Instead, they kept it suppressed with low volatile movements. It got above this moving average, found support, didn't make a new high, didn't even find support again, but a failure below here. It's gotten above it. Now we're seeing how this resistance area at 15% is acted as support now on two different occasions. So on the daily chart, it's showing it's exploding. And here on the monthly, it's showing it can still potentially explode some more, showing breakout signs more than anything. Alrighty, I didn't think it was going to be 15, 16 minutes, but I knew it was going to be over 10. Thank you for watching this. Have yourself a magnificent weekend. Bye-bye.